Hello, my name is Olu Gbemi, one of XM instructors, and today I'm going to be sharing with you how to minimize losses in trading. We all know that it's fascinating when you know that you can trade from the comfort of your home and make money. We also know, however, that trading comes with a measure of risk. However, one interesting thing you need to understand is there's a possibility for you to control your exposure, your level of risk, and to minimize the losses and protect your account at the end of the day. So now the question is, how do I go about this? How can I minimize my exposure to losses? I'm going to be sharing with you 5 tips that would help you to learn to minimize your exposure, and this way you can protect your account and gradually grow it. The first I'm going to be sharing with you is use a stop loss. This is very important. A lot of the time you will hear some traders say, oh, I don't want to use the stop loss because the price might go that way and then change again and begin to go in the direction I want. So because of this, I'm just going to leave the stop loss open. Now, you can't watch the computer the whole day. You can't be there watching tick by tick. There are times you would want to do some other things, and that might be when the market is turning against you. Also, the use of stop loss is going to help you to kind of limit your loss exposure. You already know what percentage of your account you're going to be risking with this level of number of pips that you are exposed to when you have a stop loss. So it's quite important because that stop loss is what automatically cuts off the loss when the market is against you. Another tip is follow a trading plan or strategy. It is said that without a plan, we are planning to fail. So it is important that you plan whatever trade you're going to take by having setups, like, your strategy, know it already, have it perhaps written somewhere. This is what I want to look out for first. If I open up my chart, this is what I'm going to do. If I see the trade moving in this direction, this is what I'm going to do to enter. This is what I'm going to do to exit. When you have all of that planned, then it becomes easier to know a good time to go out of a trade that is no longer working and how to hold on to a trade that you feel is still going to go your way. The third one is practice with a demo account. Now, a lot of the time we learn a strategy and maybe because it looks so good when you're learning it, you just go straight and start trading that strategy with your live account. I think it is important to practice whatever strategy or setup you learn first on demo for some times. This way, you would be able to check whether it's working for you or whether this is something you want to trade on live account. A fourth tip is you want to start small when going live. So what does that mean? So when you start, some people don't like doing a lot of practicing on demo. You can say, okay, I'm going to do a live account. Let's just start with something small to check if the strategy is working, if what I trade makes a lot of sense. And then if you start that, you'll be able to maybe journalize, look into your trade, see what works, what doesn't work. Then you can go live with maybe a standard account if you can then. All right. And the last I'm going to share with you, which a lot of traders and top traders believe to take a large chunk or large percentage of trading properly or trading sources, is control of your emotion. It's quite important that you're able to control yourself. This is called the trading psychology. You need to know how to discipline yourself well enough to follow your rules. If you are not disciplined, you're going to have your rules set out, you still will not be able to follow it. So these are the 5 tips I have for you today, and I hope you got value from them. Now, we have a lot more on our live session on XM education platform. You want to join us there every day of the week, and we will teach you better. So we look forward to have you. Thank you.